Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Market Strategist with Sticky Trades, and I'm going to change things up for you here as we come into the close on this Friday the 13th. We still have a couple of minutes before the bell rings. I want to show you what the high-low list looks like on the New York Stock Exchange. You can see right here, as we're minutes away from the close, we are showing 28 new 52-week highs. But if you scroll down here, there's 161 new 52-week lows. So the breadth of the market is still very weak. And if you look at the NASDAQ, you can see that we have 31 new 52-week highs. But if you look down at those 52-week lows, we have over 10 times that amount hitting a 52-week low. Now, what does that mean? That's called the breadth of the market. And as we come into the close, I'm going to show you what the Dow looks like here on the minute by minute chart. You can see that for the most part, we have been trending lower with lower highs, lower lows. And again, with a minute and a half left before the close, you can see that we are pivoting lower. What does that mean? Well, normally, if you look at what happened yesterday, we actually had a rally towards the end of the day back here, which was a short covering rally. Today, as we're coming into the close, pivoting lower, that's telling me the shorts are willing to keep those positions over the weekend. So as I flip to the daily chart right here, you can see that we have hit our targets from last week's market report. And if you had a chance to follow along with the midweek report, I said we would pull back to the middle part of this candle here. That's exactly what we did yesterday. I'll leave the links in the description box below so you could follow along with the last four reports so you can see how accurate these charts really are. So with that long shadow above up here, I think that we are going to turn down from that 20-period moving average and take out the lows from yesterday. So my downside target on DIA is 334.09. Look down below, increase in volume on that way down. The oscillators are pivoting lower. Stochastic is pivoting lower. The CCI, while that's still hinging up, I do believe with the drop in volume on Monday, we could see that one head back down. And there we go. There is the official close on Friday the 13th. And so now let's go look at IWM. You can see right here, we had a pretty tough couple of days for IWM, and this is going to be a little bit different. I think on Monday, we're going to go lower, and then I think we could see a bounce. Why do I think that? Well, we had a drop in volume today. It was unlike the diamonds and unlike the Qs where we had an increase in volume on the way down. I think we're going to go a little bit lower on IWM at 168.85. Then I'm going to forecast a drop in volume there. So I'm going to put that little volume bar for you. So that's part two of the forecast. And then I think we're going to rally back up to 171.72. Again, looking at last week's report, we hit that upside target of 174.54. And then on Wednesday, which was right here, I said we would come back to this level and retrace. And we did just that. So what does that mean? We are hitting 100% of our price targets over the last 7 weeks. That is unheard of in the world of technical analysis, and you're witnessing it right here at Sticky Trades. Let's go to QQQ. What do we have there? Well, we have an official pivot point. Again, hit the upside target. You know that from Wednesday. And then what happened? Today's low pulled back exactly as I said it would on the midweek report. Now, notice what's happening here. We have a slight increase in volume as we stop right at fan line number 5. I think next Monday and Tuesday, we're not just going to break out below that fan line. I think we're going to take out that 20-period moving average. Why? Look down below. The CCI today officially crossed with a sell signal. I think on Monday, the stochastic will cross with a sell signal. And then, again, that will bring us to the lows of $360.65. Looking at SPY, hopping right along here in alphabetical order. Another pivot point with a bearish engulfing candle yesterday increase in volume today, sitting right on top of that 20-period moving average. See that as I magnify that? Today's close was right on that 20-period moving average. But look down below. Again, stochastic is heading lower. CCI is crossing with a sell signal. Where does that lead us for next week? Right back down. I'm getting a little bit more aggressive with the S&P 500 on the way down. SPY target price of 426.67. Now that brings us to the VIX. What does that tell us? Well, we hit the downside target, we hit the upside targets. Again, we're hitting targets left and right here. We are closing with a longer shadow on top. So for the VIX, this is a little bit crazy. I'm going to have to erase some of these lines that we've already hit here just to clean up that chart. I think the VIX is actually going to move lower on Monday and then start to rip up and test this high right here. So I'm drawing a resistance level I think ultimately will be taken out. So this is a two-part forecast for the VIX. Ultimately lower on Monday. We might even just see a dip down and then a long shadow after that, but I think we're going to hit that downside target of 1869 and then start to rip up to a higher level of $20.71 for the VIX. Now, I want to talk a little bit about silver. I sold another 5% here of my silver position. Follow along on my Twitter page because I'm making that very public. And my plan is to buy back all of those shares as we get down to fill this gap. Remember, we filled the gap here yesterday and then started to pivot lower. And now we gapped back up over that moving average. So we might go a little bit higher, but my goal is to start buying it all back at the gap fill point. So for those of you who are ghosting or following my trades, I'm giving you my intentions before I actually do that. Remember, if you're liking what you're seeing here at Sticky Trades, remember, go to that bottom corner down there. See that red and white button? Just hit the subscribe button. You can do that right now while I'm talking, actually, and subscribe, hit the notification bell, and you'll get notified when these alerts go out. Now let's go to the geopolitical news. Again, like, share, subscribe, hit the bell. You're doing us a great favor, and you're doing our viewers a great favor because it helps the algorithms getting out to the public. Now, the jobs report came out this week, and this is what we all saw. 336,000 new jobs added. Now, what Larry Kudlow would say, let's take a look under the hood at the real numbers, because the real numbers are being hidden from the public. Here's the real numbers. Now, the real numbers are actually taken from Household Survey, which is the survey that determines or produces the unemployment rate. This is the number, 86,000. Right there. Now, why is that important? Because if you take another look, one little step further at what jobs are being created, we have multiple job holders now coming into the market. What does that mean? Full-time jobs are dropping, multiple job numbers are going up, and part-time job holders are going through the roof. What does that mean? People can't pay the bills. That's what that means. They have to go out there and take on more jobs, part-time jobs. Some people are actually taking on multiple full-time jobs. I'll get to that in a moment. But what types of jobs are being created? Well, looky there. Government jobs are on the rise, and leisure and hospitality. This is also grouped into seasonal jobs that are being created right before the holiday season. So again, that is temporary right there. But here's one that is troubling to me, at least, and should to you. Look at the types of people that are going back out there into the labor force. And this is grouped by age. 65 to 75 and older are gobbling up these jobs. Why? Because they want to stay busy and be productive? No, because their retirement benefits don't hack it. They're not able to pay their bills. And this is very sad because while most people are looking for golden years in retirement, that is not the case. But the troubling part, for me at least, is that this group here, that's our future, folks. That's the future of America right there. The retirees that ultimately will hit the market are depending on those that are carrying the GDP, and those who follow that generation are depending on those to get up off their rumps, get away from the video games and start working. We're just not seeing it. So the production is not coming from the 25 to 45 age group. And that is what we're seeing right here. We're seeing more Walmart greeters than ever before. and part-time job holders. So this should concern everyone because that does not leave us to believe that the economy is healthy. It's deteriorating. And here's another slide to prove it. This, again, is very shocking. The number of people holding 2 full-time jobs have hit an all-time high. Folks, full-time is 40 hours. The number of people holding 2 40-hour full-time jobs, 80 hours a week, is at record highs, struggling to make ends meet. This came from Liz Ann Saunders. She put this one out. Why am I showing you this? Well, businesses rely on credit from commercial banks. And you may have heard the story that credit is tightening up. Well, a lot of business owners are relying on their credit cards to make ends meet. And look what's happening here. This is spiking up in a vertical move right here. Very, very troubling. That's going to put more pressure on the banks, but it's also going to put more pressure on businesses that are struggling to make ends meet. And that's what I reported on last week is the number of bankruptcies are reaching highs over the last 3 years. Now, this is my last slide, and then I'll get right back to the report here. U.S. bank losses are at astronomical numbers right here. Remember, I was saying, I think the next shoe to drop is going to be in the banks. I don't think we're out of the woods there yet. And that just tells me that our economy is moving full speed ahead into a recession, possibly a depression. Now, I don't tell you that to scare you. I tell you that to prepare you. There's no one in the world right now that has 100% accuracy on all targets hit over the last 7 weeks. Remember, go to stickytrades.com. All you have to do is look into our membership. We have very, very reasonable prices for everyone. It fits everyone's budget. But my goal is to help you learn how to read the charts well enough to be able to go trade, maybe trade some options, and do it with authority. So with that, I'm going to wrap things up. Thank you so much again for liking, sharing, subscribing, commenting. I'm trying my best to get every comment answered or addressed. Question answers as well. Trying to get those out there. But again, thank you so much, and I'll talk to you in the next report. So long.